Welcome to ForexTV.com. Today is Monday, October 13th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar is lower against the euro and the sterling. And now for a look at the latest headlines from the CEP News Desk. The Federal Reserve approved an $11.7 billion bid for Wachovia from Wells Fargo. Citigroup had initially offered to buy Wachovia for $2.1 billion in a deal brokered by the FDIC. The G7 agreed to a set of principles over the weekend. They said in a joint statement that the current global financial situation calls for urgent and exceptional action. The principles involve deposit insurance, bank recapitalization, preventing systemic risk, and unfreezing credit markets. A European rescue plan was agreed to by European leaders. After meeting in Paris, they promised a host of measures, including temporarily guaranteeing bank refinancing in order to combat Europe's growing credit crisis. The German government unveiled its rescue plan today, which will be worth as much as €500 billion. It includes up to €400 billion worth of guarantees for banks and another €100 billion to recapitalize banks. The German finance ministry said banks will be able to draw upon a financial market stabilization fund up until the end of 2009. And the UK government has decided to inject up to £37 billion, or about $64 billion, in a bailout for the country's biggest banks. Today, we are joined by Greg Michalowski of FXDD. Hi, Greg. How are you?
Hi, Kathleen. How are you? I'm doing fine.
That's good. The U.S. dollar fell today after the Fed announced coordinated unlimited dollar auctions, which will lessen demand. And now, after last week's tumultuous week, are we going to see the dollar lose some steam on account of this?
There's a chance, Kathleen. What has been what has been happening in the currency market is that as we get good news for the stock markets, the dollar has taken more of a hit as a result of it, and we're seeing buying in things like the euro and the sterling. And basically, the theory is that as bad news happens, the money around the globe is heading into U.S. Treasuries, bills and short-term notes and such, and all this money is flying into the U.S., which has been able to prop the dollar up. And as soon as we get some sort of a good feeling out there, whether it be in the stock market or because of the news that happened, for instance, over the weekend, the money starts to flow out and be distributed a little bit further in global currencies and global currency markets, and so we see a flow into the euro, flow into the pound sterling and such. So I think as long as the sentiment remains a little bit more positive or a little less bearish as far as the credit markets go and the stock market, then we should probably see a little retracement and a selling of the dollar as a result.
All right, the UK decided it will inject £37 billion into their country's banks as part of their bailout, and we also saw a lot of equities buying on the overnight. And so far today, the pound made big gains against the dollar. Do you think the surge in the sterling will sustain, or is it just being boosted by having good news this week?
It's such a fluid market, Kathleen, so I can't really put my finger on whether it's going to be continue. But I do think there was good news that came out over the weekend, and so the effort is being made, and on a concerted basis that is going to help hopefully the credit markets. We'll see tomorrow when the LIBORs come out and see if there's any sort of relief as far as the LIBOR market goes, and this will be a clue for the credit markets. And if so, then perhaps the pound sterling can have some support. We did see it stronger against the euro. The euro sterling went down pretty good today. Went through some key support level. Also, we saw the pound sterling rise against the dollar. It did test the 200-hour moving average, which comes in at about the 174.21 level. That level also corresponds with a key retracement level of the move up from I think the 2001 lows to the 2007 highs. So really on a long-term chart, that's a key level, and that level was at 174.21 as well. We broke through that last week and made strong moves to the downside. Now we're going up and tested it again today. So the 174.21 level is looking like a key resistance level for the pound sterling. If it can get through there from a technical level and from a fundamental level, we should be looking okay for that currency pair.
All right, now also across the pond, the euro has gained the most in 3 weeks against the dollar and the yen, and this is also after the eurozone agreed on some terms for a bailout. What is your strategy for the euro going forward, or like you said, is it still too fluid? Is it still an hour-by-hour deal?
Well, the euro, like the pound sterling, went up and tested a key level in my technical that I look from a technical perspective, and that was at the 136.82 level. Again, this is where a 200-hour moving average came in, and we got within a few pips of that today, and it fell off, and it was under pressure today against the pound, as I mentioned earlier. That currency pair, the euro sterling, has been very volatile. So right now, it's not looking as strong as the pound, but the hope again is that the euro zone is able to come together. We've had the euro 15 come together in a pretty coordinated session. They're supposed to have a meeting with the other 12 nations that aren't part of the ECB arrangement. So if they all come together and there's a coordinated effort amongst the 27 nations that make up the EU, then that will be something that would benefit the euro as well. So again, it is very fluid out there, and so expect continued volatility, and they're going to be watching the stock markets as well. And if the stocks have some profit taking, which can happen at any time, we can go up 500 and be down 200, as we've seen. It seems to be that 500-point moves are just commonplace now. So you can't be really surprised with anything these days in the markets. So it requires being sort of on your toes and looking at technical levels and seeing if they break, kind of going with them, and if they go the other way, then go that way. So it's very fluid still.
All right, Greg, and it seems that other currencies, aside from the euro and the sterling, are also gaining on bailout talk, like the Aussie, but the dollar hasn't really been affected much by bailout discussion, at least here in the U.S. What are your final thoughts for the dollar for the last question here?
I think as long as things remain positive from a stock market perspective, I think that we'll see the dollar give back some of the gains. But overall, in the longer term perspective, we're still going to have some problems in the economy overall. The holiday season is not going to be strong. We still have to see the effects on the credit markets to see if the LIBOR rates come down, and we still have to get through this TARP auctions process and see how how many banks need more capital. Plus, there's also the CDS market out there, which is still a big unknown. So there's a lot of uncertainty out there, and we may have instances where we get the flight to quality again back into treasuries, and we see the dollar advance, and then there may be instances where it's like, hey, it's getting pretty bad over there in the U.S. I don't necessarily want my money in dollars right now, and maybe there'll be a better alternative in a different country where the money flows to. It's hard to see. It's very fluid, as I've mentioned a number of times. So it requires just being very careful with the positions that do go on.
All right, thanks for joining us, Greg.
Thanks for having me, Kathleen.
This has been your New York Forex Market Buzz with Greg Michalowski of FXDD. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.